Good afternoon and welcome to Markets Today. It's been quite the week at the market. We've seen significant activity in terms of volumes are up. The all-share index has also generated some significant progress in the week. But perhaps the best part of the conversation this week has been around the supplementary budget. The Kenyan government wants to spend an extra 103 billion Kenya shillings, pushing the deficit rate from 7.5 to 8.1% in the year. This will form the basis of our conversation today amid other macroeconomic indicators. Before that, let's go to the market and see how the market fared in the day. We'll start with the gainers, moving on to the losers and the movers of the day. The biggest gainer of the day today is Samia Africa, having gone up by 9.43% to close the day at 2 shillings 67 cents. BOC Kenya Limited closed the day at 82 shillings, being 7.89% up. This is good. Sanlam Kenya was on the green yesterday. I think it was the biggest gainer yesterday. Today it's still one of the biggest gainers at 7.3% up, closing the day at 15 shillings. There is still significant demand there. British American Tobacco closed the day at 4.9075 cents, being 4.86% up. I&M Holdings PLC closed the list of top gainers, closing the day at 21 shillings 50 cents, being 4.62% up. Let's go to the losers of the day. Unga Group looks like finally supply has outstripped demand, and we closed the day at 30 shillings, being 9.37% lower. Kakuzi PLC closed the day at 392 shillings 50 cents, being 5.2% lower. Standard Group PLC closed the day at 15 shillings, being 4.15% lower. Liberty Kenya Holdings PL Limited closed the day at 6 shillings 80, being 2.86% lower. And finally, the last of the big losers, Stanlib Fahari closed the day at 6 shillings 20 cents, being 1.9% lower. The movers of the day, Safaricom PLC moved 2 million shares. This is a bit lower than what they did yesterday, but still significant. Equity Group Holdings PLC did 997,000 shares. We were having conversations yesterday about the diplomatic tiff with Congo. It looks like it hasn't touched the market a bit. Equity Group is still doing well. Kangen PLC did 898,000 shares. ABSA did 425,000 shares. Kenya Power Lighting and Company did 367,000 shares. And that forms the list of our top movers of the day. Perhaps before we start the conversation with my guest today, it might add value to just have a look at some of the indicators in the market making headlines or making news today. And I noticed that we are having significant movements. I'm not getting my figures. But Abraham, karibu sana. I am joined by Mr. Abraham Muthogo, who is a senior analyst. He's been our resident analyst on matters macro every Friday. Karibu sana. What do you make of the market, even as I look for my figures?
Yeah, I just look at those figures. What makes me happy is that all the top gainers are not the usual suspects. So at least, I think that happened the last week when you were looking at it. So the activity seems to be moving towards. So maybe the counters, we will be getting richer in terms of the counters that we are playing in. So for me, I think that's a good sign. And I hope that continues, so that we include more and more into the center.
Yeah. You feel there is a renewed appetite for the smaller...
Yeah, for the non-traditional. counters.
Yeah.
Yeah.
But these ones, the non-traditional counters are usually the speculators having.
Which is fine. And for whatever reason you're investing, you're creating a hype in the market and you're creating that movement.
Yeah.
But then again, you see, for the top movers, it will always be the usual suspects because of liquidity. Like you see, like a share like BAT, it's at about 500 bob one share. So it's a share that you can easily split and just increase liquidity in the market, because that's what we need. We need more shares in the bourse so that people can play with smaller values. Because for the BAT one, you need 400 just for one.
Yeah.
So most you'll find that it is institutional movement all the way.
Why do you want liquidity in the market? What's the advantage of having that liquidity?
Because you have more players. In the morning here, we were talking about having 2 million accounts and only about 61,000 people, 61,000 of them active. It is simply a factor of that, because you only invest what you save. And with the kind of economy we are in now, saving has been pushed to the back burner. So even what they are saving is so little, they will not buy that heavier share.
Yeah.
But you can have shares split to a level where they're at below 10 shillings a piece. Then everybody can participate. But for us to include those people, the 2 million literally who are out and have accounts, to include so that they join the 61,000 guys, then the share price must be brought down, but through splits. And you see, a split basically is slicing a loaf of bread. It doesn't really reduce the bread. It just has more slices. Yes, yeah.
Fair enough. I want to perhaps just take us through some of the figures we have today. The central bank rate is still at 7%. The interbank rate is at 4.37% as at 16th. The 91 T-bill, 7.28%. Inflation rate was at 5.39% in January. Savings rate 2.55%. That's quite low. The deposit rate 6.5%. KBRR 8.9%. Our trade balance in billions of US dollars was 13.6 billion in 2021. But I want to, perhaps before we go into the conversation about the supplementary budget, just to highlight some of the items within that budget. Kenya Airways has been allocated 26 billion. The universities have been allocated 8.5 billion. Ministry of Health 14.9 billion. IEBC 8.9 billion. Development expenditure 10.8 billion. Defense 15 billion. State House 3.3 billion. Basic education 3 billion. Road sector 7.3 billion. Housing 3.2 billion. Kazi Mtaani, it looks like this, what started as just an idea to fight COVID-19 has become a core part of government. Kazi Mtaani, they're adding it 3.5 billion. Water Ministry 4.2 billion. Judiciary 1.1 billion. And TSC 6.9 billion. Now, Abraham, we are here again, and the government says they want 103 billion extra in terms of expenditure. Is this good news for the country?
It is necessary news. Let me put it like that, because I think that kind of expenditure, perform as it may be, is driven by a certain policy direction. And if you look critically, the main players there is health, there's KQ, there's IBC. So all those, first of all, KQ, we have decided that we want to save KQ. And for reasons of that, KQ is an economic asset more than it is a financial asset. We can argue till the cows come home.
I want to talk about KQ.
Yes.
But before that, do you think that why should we raid a budget in June, 3 trillion budget, and then do a supplementary one the following February for an extra 100 billion? Where is the disparity?
No, actually, if you look, that always happens in government. Because also, a 12-month horizon in government is a very long-term horizon. It's extremely long because there are a lot of moving parts. That's why they give themselves do the first 6 months, then in January, you look at your budgets and you review them. Some are reviewed down, some are reviewed up. Then this way you have a supplementary budget. Because I don't think you can get it right for 12 months.
I agree.
Yes, yes.
But the bigger challenge is the deficits.
Yeah, unfortunately, some of these things that are being brought up are almost to a level of mandatory expenditure. We have to spend on IBC, whether we have money or not. We have to spend money on health, and we have to spend money on State House. Yes, of course. But you see, that is the highest office. You see, there's one thing we mix. We mix the holder and the office. That office is the highest office in this country, and it is all of us that have decided that this is the highest office. So we give it the right. We have to resource it properly. So I think sometimes we bring politics on something that. Oh, but fair enough. Yes.
Do we have to spend 8 billion shillings extra on the universities?
Right now, you and I know that all universities are on their knees.
They are.
Why? Because they all moved to a model that they believed would last forever.
The parallel
program. And they went berserk. They employed more, they went into commitments with banks. Banks were giving them money with their eyes closed. Then one day, one time, there was a shift.
There are too many universities.
And everybody was able to go through the first intake. So there was nobody for parallel. Then all of a sudden, that income dried up. And that was what was servicing all these lages that the universities had gotten into. Now, very few have been able to cut down all that fat. So, which one is the lesser evil? We lose university seats, or we spend a little money to keep them going as they reorganize themselves? Because to me, this is transitionary, as we try and reorganize the universities back to what they used to be. Because before that, they were still okay. But now they went into ventures that they don't need. Universities own buildings, which they don't need to own. So it was just crazy. But now with parallel programs going, we have support, especially our public ones.
There has to be a reorganization.
Because if we don't, they go under. Then they go under. Now we have a bigger problem.
But Abraham, does more spending mean more wealth for normal Mwananchi? Does it mean more resources in the hands of Mwananchi?
If you look at GDP calculation, C plus I plus G, the G is a government. Yes, that contributes to GDP growth. But the question you're asking is whether it contributes to the money in the Mwananchi's pocket. That is only explained by distribution, economic development. How well this growth is distributed down. Are those mechanisms there? To me, they could be better.
That's a good one. Is it being distributed?
Yes, it's distributed. Even if I give one person, I've distributed. So the question is, how fair is the distribution? You see, so the issue is, what are distribution mechanisms and what axioms are driving them? Do you want equality? Do you want equity? What is driving us?
So it is being distributed, but is it being distributed equitably?
Equitably, because and you see, there's saying it's being distributed equitably, but are the mechanisms in place to ensure that what we grow at the GDP level gets distributed to everybody? Otherwise, as I told you here before, if you're for as long as you're not contributing and you're watching, you don't get paid. Yeah, it's as simple as that.
Oh, fair enough. You had. I still have my questions around that distribution, because I don't feel that an extra 100 billion shillings will get to the pocket of Kenyans in terms of increasing their wealth, in terms of increasing their welfare. It feels like somehow, somewhere, it usually gets disconnected and ends up in bank accounts, probably in China or Switzerland. That is my position.
Okay. But as I said, distribution, by definition, English definition, is for as long as it has been given out.
No,
but now the question is, what you're saying is, how fair is that distribution?
Yes. Fair enough. Let's talk about the deficits. Does this mean, therefore, that there will be an impact on the currency, perhaps, as the shilling gets affected? Does it mean we are going to have more borrowing? Does it mean, of course, higher inflation rates?
You see, that one, it depends how they raise it. If we raise it externally, it affects, the shilling will weaken. If you raise it domestically, our interest rates will go up. Like you're seeing now, the infrastructure bond is, for bond to be at 13, that's a very, I mean, it's an attractive, no wonder you see there it was snapped up. I mean, if you need that put up 200 billion, they would have got it, because even guys from out will come for it.
Yeah.
So that will start pushing our rate up slowly. So either way, it affects. And then the problem with borrowing it domestically, you're crowding out credit at the domestic level.
So locally,
yeah.
So in principle, what you're saying, we are doomed if you don't.
Yes.
We're doomed if we go out.
And then ultimately, of course, then the alternative is to we pay more taxes, because it has to come from somewhere, either internal borrowing, or from taxes, nowhere else. Because we are here to have reserves where we can just draw from. We don't have.
Again, allow me to ask this, perhaps even as we prepare to go for our break, which is, does more spending by a government lead to more liquidity and perhaps better trading results at the market?
Yes, spending, but qualification, spending and then paying. You see, this is, you can spend and not pay.
Like some county governments have been doing.
So yeah, because when you do that, it's better you are not incurring that expenditure in the first place, because you create a chain of everybody owing everybody and bringing down the whole system while you're at it. So when the government spends and pays, yeah, then you feel the effect. Today, if the government released 5-10 billion in cash, you'll feel it in the economy. And that's why you see this initiative like Kazim Tani. It's just a way of putting money in people's pockets.
Yeah.
Because that's what ultimately must happen, so that you spur the economy, without using certain words, you spur the economy, people start demanding things, and the producers start producing them. It has been done before, and that's the only way it can be done. Yeah. So it's, and just come back to the question, how we are able to distribute and bring down this big thing called economic growth down to everybody. Because so that everybody, if you stop somebody in the street, they'll tell you, yes, I feel better off than I felt last year.
Fair enough. Let's take a break. And when we come back, we can look at, critically at Kenya Airways, we can also look at basic education and some of the expenditure items that we have outlined. We are talking about the supplementary budget and how it has affected the markets, or if indeed it can affect the markets. Don't go away.